So it is my pleasure to welcome all of you to NYU Wagner on behalf of our Dean, Sherry Gleed, our faculty, our students, and our staff. My name is Ingrid Ellen, and I'm on the faculty at Wagner. I direct the urban planning program, and I'm faculty director of the Furman Center. We are truly delighted to host this event in partnership with the Bipartisan Policy Center. I went on the website last night and saw that the Bipartisan Policy Center, the website describes the center as a nonprofit dedicated to finding principled solutions through rigorous analysis, reasoned negotiation, and respectful dialogue. And I thought, well, that is fitting, because that is exactly what we try to teach our students to do at the Wagner School. We aim to give our students the tools to conduct rigorous analysis. We aim to teach them how to negotiate among complex sets of stakeholders. We teach them to encourage them to engage in respectful dialogue with others, even when they don't initially share their views. So it seems very fitting for us to be co-hosting this event with the Bipartisan Policy Center. It's also particularly fitting for us to be hosting an event on housing, finance reform, and the state of the housing market. There are more than a few of us here at the Wagner School who are passionate about housing and using research to inform housing policy at the local, state, and federal levels. We have a research center that is joined with the law school, the Furman Center, that works on these issues, and so we're delighted to host this event for that reason. And I can't help but saying that we are always delighted when our friend Secretary Donovan comes to visit. He is a longtime friend of mine, and he is a longtime friend of the Wagner School and a longtime friend of NYU. And more importantly, he also brings an unparalleled understanding of housing markets and policy, and an unparalleled commitment to public service. I know many of you in the audience already know Sean and have had the pleasure of hearing him speak, and so you know that you're in for a treat, but for the rest of you, let me tell you, you're in for a treat. You will learn a lot. And finally, it is my pleasure to introduce Pam Patnode, the director of the housing policy at the Bipartisan Policy Center. We like to emphasize to our students at the Wagner School that they can do public service work in the public sector, in the nonprofit sector, and in the private sector as well. And Pam's career proves that this is true. She is a model of this. She has worked on housing issues, and I may be missing something, but on the Hill, at HUD, at the White House, at a state housing finance agency, at nonprofits, and also at a for-profit, as well as a for-profit home building organization. So you can read the details of her very impressive bio in the program, but suffice it to say that we are all very lucky in the housing field that she has decided to dedicate her brains, her energy, and her creativity to the field of housing policy. So thank you, Pam.
Thank you, Ingrid. That was a very kind and generous introduction. I think I must be old if I've done all of that. And the HUD Secretary is younger than I am, so that's a definite reminder. But it's always a pleasure to work with Ingrid. I had the pleasure of working with Vicki and Mark Willis and her team on a number of occasions. I think the first event that I attended at NYU was with the I think a couple days on the job, Secretary Donovan's first speech. And I've never forgotten the title of that two-day conference. It was A Crisis is a Terrible Thing to Waste, and the programming was phenomenal, but I'm sure you remember that speech well. So I'm delighted to be back here today, and we are very grateful to all the students who have joined us here as well for this session. So history tells us that the economy will not reach its full potential without a strong housing market supported by a strong and stable system of housing finance. When our nation suffers through a recession, it is usually the home building and housing-related construction industry that leads the way to an economic revitalization. Unfortunately, our current housing finance system is broken. More than 80% of all mortgages are supported in some way by the federal government. The overwhelming government footprint in the system imposes excessive risk on the taxpayers while limiting consumer choices. The uncertainty surrounding the future of our nation's housing finance system is holding back a fuller recovery. Housing finance reform has been a key focus of our work at the Bipartisan Policy Center over the last 2 years. Last year, we released a detailed reform plan that helped reignite a debate on Capitol Hill on housing finance reform. Today, we are very encouraged that bipartisan reform legislation, the Johnson-Crapo bill, is now poised to advance in the Senate. Later in the program, we'll be hearing from Richard Smith. Richard is the Chairman and Chief Executive Officer and President of Rheology Holdings Corp., a global leader in real estate with franchises including such well-known brands as Century 21 and Caldwell Banker. Richard is a key member of the BPC Housing Commission, and we've had the benefit of learning a great deal from his experience and his insights. Recently, I was not surprised to read in our clips that Richard was named one of the most powerful individuals in the residential real estate brokerage business in the world. Richard, it's great to see you, and I want to thank you. He's extremely dedicated to the BPC. We spent the day yesterday in New York at meetings, and these are volunteer positions, and I don't think when they signed up, they thought it was going to be a 2-year commitment, but we're well into the next year already. So now it's my privilege and honor to introduce our special guest, the Honorable Sean Donovan, Secretary of Housing and Urban Development. When Secretary Donovan assumed the reins in 2009, I think it's fair to say that our housing finance system was on life support. The foreclosure crisis was, I think, at its peak, and families across the country were devastated by the economic recession. I think it's also safe to say that no one's ever been better prepared to be the HUD Secretary than Sean. He served as Deputy Assistant Secretary during the Clinton administration, and in fact, last night, Secretary Mel Martinez said that he was so proud to have Sean Donovan, then Deputy Assistant Secretary, on his staff that he asked Sean to stay, and I didn't know that until last night. Sean actually was held over during the Bush administration to make sure that that administration got off to a good start. During the time that he served as HUD's Deputy Assistant Secretary, I think Sean gained a deep appreciation for balanced housing policy. I think that is very evident with the work that he's been doing in the 5 years since he has been at the helm of HUD. Sean's a native of New York City. He grew up here in Manhattan. He previously served as the Commissioner of the New York City Department of Housing, Preservation, and Development during the Bloomberg administration. He likes to say that he has served under all 3 parties, the Republican, the Democrat, and the Independent Party, and that was all during one administration under Mayor Bloomberg. So we appreciate Sean has repeatedly reached across the aisle and helped us. I don't think he has ever turned us down. We hope he'll be joining us at the summit in September. I think all of you got the cards, and we do hope to see many of you in Washington. Sean has a tremendous track record, and I think this country is very, very fortunate to have Sean Donovan at the helm during this very, very important time. So please join me in a warm welcome for Secretary Sean Donovan.
Pam, thank you for such a kind introduction, and I want to thank you personally for your leadership. Even more important than a nice introduction is what you and the entire team at the Bipartisan Policy Center have done in organizing this event, and even more importantly, in the work that you've done around housing finance reform. And I mean it when I say I think one of the greatest challenges we face as a nation is that our partisanship and ideology has stood in the way too often of moving this country forward. And certainly I see that in Washington way too often. The center has been an incredible breath of fresh air in its focus on partnership and on solutions. How do we actually solve the great problems of the day? And I will say that the housing report, the report that included very detailed recommendations for housing finance reform, but a range of other issues, I really believe is responsible for us being able to start a grown-up conversation on housing finance reform in Washington, D.C., and I am very excited to continue what I hope is that grown-up conversation today about what we can do to move forward. And I do want to say, Richard, thank you for your leadership with the Bipartisan Policy Center, with the Housing Commission, and for all your work that you do every day to serve so many people around the country aspiring to the dream of homeownership. So, thank you. Finally, to my great friend Ingrid, and to all of you at NYU that are hosting us today, This is an institution, as Ingrid said, that has meant an enormous amount to me over the years. NYU took me in at the Furman Center when I was returning from HUD the first time, and was a wonderful place to think and reflect on that period and to do research. My time as commissioner here, I was always looking to NYU and to Furman to partner on the most important research questions and policy questions that we were grappling with. And this has continued at HUD, where just two recent examples, when we put together an international competition that we called Rebuild by Design to try to bring the best ideas about how to make this Sandy region more resilient, this region affected by Sandy more resilient, we looked to NYU. And we are in the process of setting up, and will soon announce, a new national resource network, which is a brand new tool for technical assistance and other support to help cities meet their greatest challenges around the country. So to everything that you, Ingrid, have done personally, and also to NYU, thank you for all that you have done to be a force for progress and good, and it is truly a pleasure to be back with you. So thank you so much. I also want to acknowledge, as I look around the room, that I see so many friends and partners that I worked with over the years. And I also see an incredibly diverse audience. I was just mentioning, Rich, I was looking through the RSVPs for this, and we have financial service companies, affordable housing organizations, government officials, leading academic institutions from across the city, students from many of those institutions, and many, many more of you that join us today. And, you know, it is very rare that you can get this kind of incredibly diverse audience together, but we all know that this is a subject, housing, that unites incredibly diverse and strong networks to work together. No matter who you are or where you come from, what you do, housing touches your life in very, very important ways. It's at the center of every family's life. It's at the heart of strong communities. It helps people build wealth, start small businesses, send their kids to college, retire with comfort and dignity. It's an incredibly important part of our economy, whether you're on a construction site or at a trading desk, creating jobs and fueling growth. In short, the state of our housing impacts the state of our nation. And in the best of times, borrowers, lenders, investors all benefit from a well-functioning, liquid market. And I would say that market ripples throughout the world economy. Loans from the U.S. housing market make up the second largest securities market in the world after U.S. treasuries. And as we saw very painfully, when this market allows or even encourages irresponsible behavior, then we have a serious worldwide problem. And that is exactly what happened last decade. To use the president's words, we saw responsibility too often give way to recklessness on all sides. Lenders made loans to those who weren't ready to own. Buyers bought houses, sometimes multiple houses, that they clearly couldn't afford. Financial firms went overboard in their structuring of mortgage-backed securities. And by the time President Obama took office in 2009, the housing market was in free fall. I remember, in fact, the very speech that Pam was referring to, my very first address significant policy address as secretary here at NYU. And I remember exactly that sense of crisis in the room and across the nation. All the anxiety, uncertainty, and fear about what was happening and what would happen in communities across the country. Home prices had fallen nearly 20% from just the year before, the single largest one-year drop ever measured. Roughly 3 million borrowers were seriously delinquent at that moment. Hundreds of thousands of construction workers had been laid off. Communities had been devastated by abandoned and foreclosed properties. And because the housing collapse sparked this larger economic crisis across the world, everyone was hurt. Didn't matter if you were on Wall Street or Main Street, the downturn impacted you, your family members, friends, and neighbors. And that is exactly why every one of us has a stake in turning this around and getting this subject of housing finance reform right. So in the years since, the Obama administration has been committed to doing our part, including helping more than 8 million families modify their mortgages, allocating $7 billion to address distressed properties in all 50 states through our neighborhood stabilization program, and providing 9.5 million families with HUD-approved housing counseling so that they can make better financial decisions for their future and hopefully remain in their homes. That work has led to a significant rebound in the housing market. In recent years, we've seen all the key indicators, including housing prices, sales, starts, moving in the right direction. In fact, just since the beginning of 2012, families have restored $3.7 trillion in home equity. Clearly, better things are happening on the ground. Gains are being made. But make no mistake, none of us should be content. We all know that in the current system, there are far too many responsible families who are ready to buy but can't get credit, or who can't find a rental that they can afford. That lenders still have to deal with too much uncertainty and too much red tape, that investors still have too many questions about the securitization market, and that taxpayers are still on the hook for future bailouts. That is why we need to reform the housing finance system once and for all. No matter what your interests are, this is a point that we should and can all agree on. The status quo, which first allowed rampant recklessness and now denies creditworthy borrowers access to credit, is simply not sustainable. That's why it baffles me when people say that we should keep the current system. We've seen this story before, and we know how it ends. And it would be irresponsible to do nothing before another crisis hits. Instead, we have to take action and commit to getting reform done as soon as possible. The only question is, what should that reform look like? To answer this question, last August, President Obama released his vision for a housing finance system of the future that's based on 4 key principles. First, ending Fannie and Freddie moving forward. Second, putting private capital at the center of the system. Third, ensuring widespread access to responsible products like the 30-year fixed-rate mortgage. And fourth, ensuring affordability and access for families of all income levels. The Bipartisan Policy Center also put forth a number of critical ideas that really got this conversation started, as I said before. And so many of you in this room today have participated in that conversation as well. The good news is that as we meet today, we have a real opportunity to make reform happen. As all of you know, last month, Senators Johnson and Crapo released housing finance reform legislation. This bipartisan effort represents an important and positive step forward in making reform a reality. And I am pleased with the direction that it has taken because it aligns with those 4 key principles that the President laid out last August. First, it creates a housing finance system with certainty on what the government guarantee means and when it's used. One of the failures of the old model is that Fannie and Freddie offered implicit guarantees that left taxpayers on the hook. President Obama called this the heads we win, tails you lose approach. Johnson Crapo tackles this by winding down Fannie and Freddie, creating a new government entity to oversee the secondary mortgage market, and ensure certain mortgage-backed securities, but only after the first 10% in losses would be covered by private capital. This means taxpayers won't be left holding the bag the next time trouble hits. And that is good for all of us. Let's get reform done. The second reason I'm pleased with Johnson Crapo's direction is that it will attract private capital back into play. After years of rumors, confusion, and guesswork about the future, the new system would provide the certainty that private capital needs to return to the market. We all recognize that a mortgage market dominated by Fannie and Freddie and FHA is unsustainable. By creating a new set of rules for the road, Johnson Crapo will bring some equilibrium back to the marketplace while keeping in place the aspects of the current system that do work. This means preserving the liquidity of the TBA market and establishing a stable and efficient securitization platform that will continue to issue standardized securities in the reform system. We've got to ensure that originators and secondary market participants can continue to connect to the housing finance system in much the same way as they do now to keep credit flowing. This will be good for all of us, so let's get reform done. The third reason I'm enthusiastic about Johnson Crapo is that it will use market-based incentives to ensure broad access to credit. Attracting capital is important, but we've also got to make sure it reaches all those that are ready to own. When it comes to access, before the crisis, credit was too easy to get, and now it's too difficult. One example, from 2007 to 2012, mortgage lending to those with credit scores between 620 and 680 fell 90%. And that's compared to lending to those with credit scores above 720 that fell by a third as much, by 30%. So you can see the dramatic difference in access. There are a lot of qualified potential buyers out there who aren't being served by this current system. To help meet this challenge, the Federal Housing Administration has continued to work with responsible families in underserved communities. Specifically, we're looking for innovative ways to get credit to those ready to buy and ensure these transactions have the best possible chance to succeed. Through our Homeowners Armed with Knowledge initiative, we're working to embed housing counseling throughout the FHA origination and servicing process, allowing borrowers who commit to housing counseling to qualify for lower upfront mortgage insurance premiums at closing, a permanent reduction in the annual premium that they pay each year, or both. Through updated manual underwriting guidance and our Back to Work initiative, we're ensuring that lenders look at the whole financial picture when underwriting a loan. This is particularly important for families who may have been hit by the economic crisis, lost a job temporarily, and would otherwise have no chance to get back in the market. But with this Back to Work initiative, we can help them, if they are ready to buy, become homeowners once again. This helps those who've experienced damaged credit be considered, as I said, for a mortgage. And through revisions to our quality assurance, we're making important improvements in how we monitor for lender compliance, as well as pushing back against the need for harmful credit overlays, which deny families that would otherwise be qualified for FHA's underwriting from getting those mortgages in the first place. In total, FHA continues to fulfill its mission of helping open the doors to homeownership for a wide variety of qualified, responsible buyers. But despite our enthusiasm about this work, we recognize its limits. It cannot address larger concerns that go beyond FHA. Only legislative reform can, which is why we're pleased to see that Johnson Crapo included a requirement on the new regulator to provide liquidity to the whole market. It also contains a framework to give community banks and small lenders a better chance to compete, resulting in increased competition, which can help expand access. It also proposes creating a market incentive system that will support broad access to mortgage credit, and that is a win for everybody. So let's get reform done. Finally, I'm very pleased that affordability across all segments of the housing market is addressed in the bill. Whenever the national dialogue centers on housing, the focus tends to go toward homeownership. But we must also recognize that homeownership isn't for everybody. Not everyone can buy, not everybody wants to buy. And one of the consequences of the housing collapse is that more people are renting, demand is soaring, and prices are climbing. On top of that, as our nation continues to fight its way back from the economic crisis, many people are still looking for work. And for those who have jobs, wages are too often stagnant. Taken together, these trends have created the worst rental affordability crisis that this country has ever known. According to the Joint Center for Housing Studies, in 2012, roughly half of all renters paid at least 30 cents of every dollar they earned on housing. We're talking about 21 million households, the greatest number of housing cost burden renters on record. As these numbers demonstrate, a commitment to affordable housing is needed now more than ever. And that's why it's important that the Johnson Crapo bill proposes up to $5 billion a year for a housing trust fund that would produce affordable rental housing, among other goals, and 2 other critical funds. Let me just take this down to the New York level as well. The Housing Trust Fund for New York State in an average year would mean about $400 million of new investment in affordable rental housing across New York State. This is critical so that struggling Americans can get a fresh start in life. It's critical so that the nurses, firefighters, police officers, and other Americans who are working so hard every day can continue to call their communities home. And that's something worth fighting for. So in total, the administration is very pleased with what Johnson-Crapo does to shape a stronger, more efficient system for the future and address access and affordability. Unfortunately, there are those who look at the recent performance of the GSEs and argue that reform isn't needed anymore. To that I say, think again. Only congressional legislation can put a definitive end to the GSE's failed business model and replace it with a system that shifts credit risk from taxpayers to the private sector, ensuring that any government backstop is explicit and properly priced. Without a blueprint and mandate, the current regulator of Fannie and Freddie, FHFA, will be much more cautious in taking these steps, and progress may not be consistent with the direction that Congress ultimately determines for housing finance reform. This will continue to deter the return of private capital to mortgage financing, which is why we need to get reform done so that Mel Watt and his team have 5 years at FHFA to build for the future. It's also important to recognize that without congressional action that defines the government's role in the mortgage finance system, the revival of a robust non-agency securitization market may be incredibly challenging. This limits the options available to families, which is why we cannot let the current system remain. Only legislation can reshape the housing finance system and maintain the balance we're all seeking between opportunity and responsibility. Is this bill perfect? Of course not. Nothing is. Are there things that all of us would change? Of course. Let me just give you one example. From HUD's point of view, it's our belief that Johnson-Crapo needs to preserve our existing authority as it relates to the Fair Housing Act and the secondary market. And I'm sure every one of you has your own suggestions. But to be clear, despite its imperfections, does this bill represent progress? Absolutely. It brings private capital back so that businesses can innovate and drive down costs. It raises $5 billion per year for our affordable housing needs. It sets up a more resilient housing finance system and ends the system that caused so much damage. That's why we've got to push forward. Now, I've been accused, some have said, Sean, are you crazy? How can you think in the Washington of today that we have a chance to get something done? Well, first of all, what I can tell you is that housing has historically been an area of cooperation in Washington. President Truman and Senator Taft worked together on the Housing Act of 1949. Ed Brooke and Walter Mondale worked together to produce landmark housing legislation decades later. Last year, the Bipartisan Policy Center came together across partisan and geographic lines and put together a proposal that really started this debate. And we've seen this proven again by Senators Corker and Warner last year with their proposal, and most recently by Senators Johnson and Crapo. And in the larger context, we are beginning to see bipartisan cooperation on a number of fronts, including the budget and the debt ceiling. So there are positive signs showing we can get something done even this year. But this opportunity won't last forever. In fact, this might be the only real chance we have this decade to achieve reform. Let's not waste it. The bill's markup is 1 week from today on April 29th. When looking at ways to improve it, let's not lose sight of its potential. Let's not forget its importance to the housing market and to its future. Inaction is simply not an option. This is the time to make the status quo a thing of the past. This is the time to restore opportunities for families and ensure a crisis like we just faced never strikes again. This is the time to finally make reform reality. We have a chance in our hands to bring this across the finish line. Let's come together from all parties, from all sectors, to make it happen. Thank you for being here today. Let's go to the lounge chairs.
All right, Mr. Secretary, welcome to NYU Wagner.
Thank you.
Let me
Good to be back.
I'm sure it is. Let me begin by saying you covered every question I was going to ask you. So I'll try to be finite in my discussion. Now, it's very difficult to be rational and practical in Washington, D.C. But along those lines, between now and the midterm elections, what are the practical issues that are going to serve as impediments to a successful resolution of the outstanding issues under Johnson-Crapo and actually come to a bill that the President would sign?
Look, I think we all have seen the challenges trying to get something big and important done in Washington. This is not a simple bill by any means, and in particular, in an election year, this is not a question of, we've got months, we can work on it over the summer. I literally think that if we can't get this bill quickly from markup to the floor in the Senate, it will be very difficult to have a window to get this done in the House, given the elections that are approaching. And so I think that is a real barrier. On the other hand, what gives me some hope, in addition to this broader sort of bipartisanship that I talked about that has always characterized housing, I think it brings together unusual coalitions between industry and advocates and consumer groups. What we are seeing is that there is a sense, I think, for Democrats in the Senate that with the risk of a potential turn in the Senate, don't believe that's going to happen personally, but it is a possibility. There is some real urgency to try to get this done in the Senate this year. On the other hand, for conservatives and a broad range of Republicans, the concern about the current status quo continuing only gets greater, right? As we get farther away from the crisis, as that recedes in our memories, then I think it does become harder to make the case for reform. And so I think on both sides there is a sense of reason to try to do this and urgency. And look, anytime we've already got 12 senators, 6 Democrats and 6 Republicans supporting Johnson-Crapo in a committee that is, that's the majority of the committee right there. I think if you could see a few more votes, I think it brings a very, very good chance that this will come to the floor successfully in the Senate.
If you had to categorize the impediments on both sides of the aisle, and you had to pick one or two on both sides of the aisle, why are the Republicans resistant on their side of this equation, and why are the Democrats somewhat resistant? So if you were to give the audience guidance as to here are the things we must overcome, aside from politics, to get to a resolution.
Look, I think there is on the Democratic side, I think there are two, and I don't want to limit it too much, but I would mention two key questions. One is, what will the cost of the system ultimately be? What will it cost to get a mortgage under the new system? I know for realtors, for so many others that work in this, as well as for advocates of broad access, that's a critical question. And there have been estimates. Mark Zandi has said it's about 40 basis points. We actually believe it's lower than that. Our economist has done a lot of work. And obviously we're waiting to see what amendments might be added to the bill beforehand that might go even further. One of the things that we should recognize is under the current system, we sort of have the worst of both worlds, right? You've got a government guarantee, which for many Republicans is a concession that they're concerned about. On the other hand, because of the uncertainty around that guarantee, given the state of the current system, and it's basically a limbo state in conservatorship, not clear where it's going to go, Fannie and Freddie paper is 25 basis points more expensive than Ginnie Mae paper on average when we're providing exactly the same guarantee. And so we are clearly losing affordability just as a result of the uncertainty of the system. So I think we believe that having the system resolved, the uncertainty removed, that you could actually see significant benefits in terms of pricing from that. And so we tend to think that the cost of a mortgage in the new system is less than some other estimates. But that's a big one, getting the capital levels right, making sure that you have the right cost in the new system. And then I would say the second one is, will the proposed sort of target of getting broad access, what some are calling a flex fee, and basically what the system does is to say there's an average of 10 basis points that comes off loans that go through the system, and that's used to fund that would average about $5 billion a year that I talked about in my remarks, the National Housing Trust Fund and 2 other funds. But the proposal is to have that vary so that if you are doing a good job as a lender in the new system, and as a guarantor actually in the new system, providing broad access to underserved markets, then you would actually have a lower fee that you would pay. If you're doing a poor job in providing access to credit, you would actually pay a higher fee. We think under the way the system is designed, the spread, the amount of money that variable fee could generate in incentives is about $3 billion a year. And we believe that's a very powerful incentive to drive the system to make sure that credit is available broadly in underserved markets. There are concerns by some Democrats, will that system work? How do we improve it? And is it going to be enough as a market-based incentive to drive lending toward markets that have been traditionally underserved? So that's, for the Democrats, that's a big one. On the Republican side, I think other than the guarantee is, how do you create enough certainty in terms of the way the system's going to operate, recognizing there needs to be some flexibility for a regulator, not providing too much flexibility that would allow us to return to the very loose terms of lending that we had that really led into the crisis. So I think those are 2 key sort of issues that I would point out on the Republican side as well.
Then an underpinning is the return of private capital to a market that has been, for the most part, guaranteed by the U.S. government. So when you're speaking to those in the audience and elsewhere who are concerned about private capital's willingness to come back into the market, what are the aspects of Johnson-Crapo that you believe would incentivize the private market, many of whom are current shareholders in both Fannie and Freddie, to set those issues aside and come back into the market with fresh capital to essentially finance housing for decades to come?
Well, look, any person that's engaged in providing capital for housing finance is going to want to know the basics of what that system is going to look like. What are the loan limits? What are the structures? What are the risks that they're taking? And the fact is, there's understanding of what that is in the current system, but there's a huge amount of uncertainty around the future. And anybody, as you know, you're going to make business decisions where you've got to invest a lot of capital in setting up the infrastructure, hiring the people to do it. You're going to want some certainty that that system will be in place going forward. And right now, you don't have that certainty if you're trying to. So there's a basic sort of, we're in this limbo state right now of conservatorship. I think it has a risk of becoming sort of a zombie state over time if we don't resolve it. I think the current problems with market credit access in the current system are only going to get worse over time as this goes longer. Just the basics of resolving that are critically important to providing. But there are a range of other things as well. And it's interesting. You've got, right now, capital that's returning to the commercial market, right? If you're trying to get a multifamily loan, securitization is happening around commercial multifamily loans. It's not happening in single family because of that same uncertainty. And certainly, given what happened in the crisis, investors are saying, what are the rules of the road around how securitization is going to work? What am I going to be on the hook for as an investor? And what will those who packaged the securities be on the hook for? One of the big problems we had that led to the crisis is we didn't have clear rules of the road. Setting up this new system, creating a securitization platform, would allow us to put those rules of the road in place that will attract private capital back. There are other things that we can do. I'm not going to say that the only thing we should do is the new system, and we're working on some of those things. But clearly, eliminating the uncertainty, creating clear rules of the road for investors, trustees, standards, and other things are going to be absolutely critical to bringing capital back into the system.
So if Johnson-Crapo is successful and it becomes the law of the land, how do you view FHA's role post a Johnson-Crapo legislation?
So traditionally, FHA has been sort of 10 to 15% of the market in normal times. And we focus on one of our two core missions, which is making sure that low wealth borrowers who might otherwise have trouble getting access to a loan are served. Right now, we are playing an outsized role because the current system is doing such a poor job of serving underserved borrowers. Let me just give you some specific examples. Right now, 3% of the loans that Fannie and Freddie make are going to African Americans. Between 5 and 6% of the loans they make are going to Latinos. That is woefully short of what we should be doing to make sure there's broad credit access. And so FHA has become, in many communities, the sole source of credit for minorities. Half of all African American Latino borrowers that are getting a loan are actually using FHA right now, which is far higher than we would typically see. And so I think for first-time buyers, for African Americans and Latinos in communities that have been traditionally underserved, what we need to see is a future system that would help make sure that FHA isn't the only source of credit, that we don't have a dual mortgage market that's really going to lock them out. And I think that is critically important in terms of allowing FHA to sort of return to its historical role of providing a more limited role in the market. But we're gonna have to see, right? Unless we get the bill done, unless we get it right, I think FHA will continue to play an outsized role. And what that means is, frankly, that we're doing these loans with 100% government guarantee. There's increased risk to the taxpayer based on that, and there are the risks that FHA won't be able to handle that volume going forward.
So the credit box is pretty narrow right now, and I think it's apparent in the first-time buyer market. How do you see, and I know people are fearful of this phrase, normalcy. So a return to normal underwriting creates fear in many of us. So what do you see happening to underwriting in a post-Johnson-Crapo bill? Does it become more normal in the sense that it's good, prudent underwriting, or must it swing in a different direction to make up for very tight underwriting that's occurred over the past several years?
Well, clearly it needs to move. And I will say for FHA, I mentioned this in my remarks, we are pushing to make sure, our credit box is here, right? We say, these are loans that we'll accept in FHA. The actual loans that are being delivered to us are much narrower because of these overlays that I talked about before. And a lot of that is concern about the things that I talked about. Our quality assurance going forward, how do we make sure that home buyers have the knowledge, that they get the counseling so that they're going to be prepared longer term, but also the broader uncertainty that exists in the system right now. It is absolutely critical that we continue to push for responsible loans being made. My sense is, depending on the market, there are 10 to 15% of borrowers that are getting left behind right now, or where it's just too expensive. And what that means is, we're losing the ability to accelerate the housing recovery, put more people to work, get more construction, get more people back above water. And all of that would be good for our economy more broadly. So that's why the president has focused on this issue of credit access. Under the new system, not only do you get certainty of what the system looks like going forward and greater investment, I think what you also get is that a standard is set in the market, the qualified mortgage would be used as the basis for the system. And what that means is you can be assured you're not going to get the, liar loans, zero down payment, or the hidden features, exploding arms, all of those kinds of products that led to the crisis. You have, through this system, a built-in regulator for that by having the qualified mortgage, which bans those features being the standard, while still having the ability to get, for first-time home buyers, 3.5% down payment mortgages, which we've seen at FHA have performed through the crisis if they're underwritten well.
So we are near our end, and I want to touch on one topic that I know is very important to you. Coming out of the housing recession, it has always been the case that affordable housing is a cornerstone of housing policy for this country. Do you see that under pressure, or are we just as committed to that as a nation as we have been historically?
Well, look, I think one of, I mentioned in my remarks that we're facing the worst affordability crisis the country's ever had. I think in some ways, ironically, the general perception that what happened in the crisis was, devastation in terms of home prices dropping, foreclosures, abandonment, but also a sense that housing got more affordable. And obviously, with the home price increases we've seen over the last couple of years, that has begun to change. Home ownership has gotten more expensive given those, but it's still quite affordable on a historical level. Many people have missed the rental crisis that we're facing because the exact opposite happened. In fact, many of those homeowners who lost their homes became renters. They created much more demand, and particularly at the low end of the spectrum, we've seen rents rise dramatically. We've seen the biggest increase in worst-case housing needs in the history of our taking that survey. So it's not just that the current level is the worst, but it's risen incredibly quickly through the crisis. And so I do think for many people that affordability crisis on the rental side is not in the forefront of their minds. And I do think we have to do more as folks who care about housing. And I think the Bipartisan Policy Center, the report that you did, the commission really did a great job of focusing on that and asking big questions about how do we restructure the way, how do we increase our investment in affordable rental housing around the country. And look, in a world where the budget pressures have been enormous, there's no question that we haven't done enough at the federal level, and it's been increasingly difficult at the state and local level to invest at the scale we should. I give Mayor de Blasio a lot of credit for taking a very clear, bold stance on this. 200,000 units as a commitment to affordable housing. I think that's wonderful. We should make his job easier by passing housing finance reform. As I said, $400 million a year to New York State in an average year just for the Housing Trust Fund. That would be a huge boon to Mayor de Blasio's efforts and efforts across the state and across the country to do this. So at a time when resources are so limited, we have a once-in-a-generation opportunity to get a big new infusion in affordable rental housing. We should not miss that chance. To go back to the original lecture here, a crisis is a terrible thing to waste, and this is an enormous opportunity to to learn the lessons of that crisis.
That's a great way to end our comments. So, Mr. Secretary, on behalf of the Bipartisan Policy Center and NYU Wagner, thank you very much.
Thank you.
We're done.
I don't know where Dennis is. We have, Richard Ravitch is coming, right?
Yes.
The 17th, 16th?
Can't compare with this,
But,
but we
yeah.
do have a good event coming on the 16th. There'll be breakfast meeting here at the Wagner School, 8:30. Richard Travis is going to be talking about the